Aloha, I'm Evan Leong from Brain Gain Hawaii, and welcome to Save Hawaii Jobs and Businesses webinar for May 13, 2020. This is our 12th webinar for the series, and SBA released their new Q&A. I don't know if we got it early morning or last night. With only a day left before that safe harbor deadline tomorrow, we wanted to make sure that we could get whatever info we could to you folks today. So thanks for being patient and joining us on super short notice. If this is new for you, we've got a resource folder and an updated memo, as well as previous webinar videos on YouTube. Please make sure you review the documents before asking a question, since most of the answers are in those documents. Buddy will be posting info in the chat. Please let me introduce our team for today. We have Jane Sawyer, who's the Hawaii District Director for the SBA and our champion for Hawaii small businesses. Yearend Leong is a specialist in employment law from the Law Office of Yearend R. Leong. Stacy Katakura is the CEO of Accumulus, which is an outsourced CFO and accounting firm. Jeff Harris is a specialist in employment law and a senior named partner at the Torkelson Law Firm. Buddy Leong is an analyst here at Brain Gain Hawaii. He handles our communications, backend, and chat box. Koko Leong is our editor at Brain Gain Hawaii. He's in charge of our content, YouTube channel, and podcast. Questions today, we'll take it during the webinar through the Q&A module only. If you post it in the chat box, Buddy will ask you to post it in the Q&A. So when you see the questions in the Q&A, please upvote the questions that you think are the most important to yourself, and then that's kind of how we go in order toward the latter part of the webinar. Please keep in mind this is a fully volunteer effort. This team has personally answered hundreds of questions. Email threads and hundreds of billable hours have been donated. We felt like we had a vacation yesterday, but I guess not. We're back on today. Legal disclaimer for today. This information is provided for informational purposes only and is not intended as legal or tax advice. Please consult your attorney or accountant to discuss your particular business situation. SBA's participation in this presentation is not an endorsement of the views, opinions, products, or services of any of the participants, persons, or entities. All SBA programs and services are extended to the public on a non-discriminatory basis. This information is current as of today, May 13, 2020. We're changing it up today, so we're going to start off with Jeff Harris.
We were looking forward to some guidance from Treasury over the last couple days in advance of the extended May 14th deadline for the decision whether borrowers that were concerned about their certification would be best advised to give back the money. And we got half a loaf. Early this morning, Treasury, SBA and Treasury issued another question and answer that's available on their website. And it's question and answer 46. And it answers the question, how will SBA review borrowers' required good faith certification concerning the necessity of their loan request? Let me first point out that we've been expressing concern about two certifications that borrowers signed in order to get their loans. The first was that the loan was necessary to retain or rehire employees and pay them. And the second was the certification about the necessity of their loan request. The SBA Treasury gave a glowing pass to each one of you whose loan amount is under $2 million. They said you acted in good faith. Okay, they said they're going to presume that you acted in good faith, and that they're not going to look behind whether or not it was false that you certified you needed that money. So check off that box. You need, if you borrowed less than $2 million under the PPP program, and you certified that that money was necessary, SBA gives you a pass on the good faith certification that it was necessary requirement. On those of you that have more than a $2 million loan amount, the SBA also limited the remedy that's available. They said when it comes time to review of your loan amount, they may still find that you failed on, you really didn't rightfully certify that that loan amount was necessary. but they're going to give you a pass on the money that you already spent. In other words, say your loan amount is $2.5 million, and you spend $1 million paying employees and rent and utilities, including transportation, some of your pre-existing debt interest. Well, what you spent, they're not going to ask for that back, but you're going to have to pay 1% on that throughout the remaining term. What they do say in the Q&A is the money that you haven't spent, they're going to promptly ask you to give it back. And if you don't give it back, they may institute administrative proceedings. Noticeably absent from any of this discussion was what we were concerned about before, and that's they appear to tell those employers who have over $2 million loans, we're not going to go after you criminally. Okay, and if you give the money back when we ask for it, the money that you haven't spent yet, everything's going to be fine. You're just going to have to pay 1 point on the money that you spent and have no forgiveness over the course of the loan. So the certification question on whether the money was necessary for over 2 million is really just going to be forgiveness. For both over 2 million and under 2 million, we still have hanging out there the certification on that you were going to use the money to hire or rehire employees and pay them. And we see no SBA guidance on that. Evan?
Actually, I'll step in for Evan.
Okay.
So Jeff, just to make sure that I'm thinking about it the same way that you are, for loans under $2 million, which includes all affiliates. So you would have to take into account the affiliated entities. And if that loan amount is under $2 million, basically SBA just said, we're checking off the box on whether the necessary certification was met. Is that right?
Agreed.
Okay. And then with respect to loans over $2 million for affiliates, they softened, which is to say that if they find you in violation of the certifications, because all loans over $2 million are still going to be audited, they are not going to essentially refer it for criminal prosecution. So they've softened that position. Is that right?
Only if you give the money back.
Yeah. Okay.
They're going to say, you could, if you spent the money on an allowable use, you can pay that back at a 1% loan. If the money that you didn't spend for allowable uses, we're going to ask you to give it back. And if you give that back, we're not going to come after you, either administratively or criminally. If you don't give the money back that you didn't spend yet, then everything's still there.
Which leads to the still open question for businesses over $2 million loans, which is that for those businesses, a lot of them got their PPP fairly early in the process, and they are in week 4 or 3 or 5 right now. They've already expended, a significant sum on payroll that they might not have otherwise carried, but for the PPP loan. And it's still an open question for them as to, based on the existing guidance that we've talked about, that we issued the memo on, that talks about access to adequate sources of liquidity, current business activity, that sort of thing. They're sort of left with what we had before in order to make a decision on whether to keep expending that money or not.
Yes, but it's not, the decision is not as draconian. Now, if you keep spending the money on allowable uses, you're only going to owe the 1% interest on that money you spent. The money you don't spend, you're going to be given an opportunity to give back. And if you give it back, that's the end of the story. The concern before, the concern we had before is you're going to spend all that money and they're going to ask for that back and they're going to prosecute you criminally and you're going to have a False Claims Act claim against you. I think this Q&A eliminates all those more draconian remedies and leaves you with, at least on those people that may have other adequate sources of capital, with what they may decide is a fairly easy choice. They may still think, hey, for 1% money, it's worth bringing the people back. If it's no, or they may decide, no, if it's not free money, I don't want the people. But that's a less draconian question than, hey, am I going to be prosecuted or I'm going to have a False Claims Act claim made against me, or is the SBA going to, and are the SBA and Treasury going to come against me for the money I already spent? Even for the people over 2 million, this says to me at least that they can go ahead and keep spending that money on allowable uses to rehire and pay employees without being particularly concerned that that the relief, if they were wrong about the certification, is anything more than 1% on that money.
Let me pose this question, which I'm just sort of thinking of as you're talking. This, again, for businesses over $2 million loans. Tomorrow is technically this deadline that's been set for returning the money and having a quote unquote safe harbor. But given the Q&A that now says we're not going to go after criminally if you end up returning the money, you know, you have a large business that's already expended a substantial amount. I mean, is there any reason why that business would give the money back tomorrow, as opposed to if they were taking a more conservative approach because they're very iffy on whether or not the loan is going to be deemed necessary to meet the certification? Wouldn't they just hold on, basically, you know, not give it back tomorrow, but hold on and maybe not expend it as aggressively on payroll that they were doing?
Let me answer that question with another question. Aren't most people that brought the people back and paying them with the PPP money going to keep doing that if it only means a 1% on the loan? They're going to have to pay those whole proceeds at the end of the term. So there is a real cost. They're losing forgiveness. They're losing forgiveness and paying 1% if the money was not necessary.
So again, and to clarify, we're only talking about businesses with loans or affiliates with loans over 2 million right now, right? But I think the answer to that question is, if the reason why they brought those employees back is for the purpose of using PPP the way it was rolled out, and to get forgiveness of that money, and they would not have otherwise brought that person back and put them on payroll, then they might, I think they might not, or, you know, it's a business decision, but there definitely would be a scenario where they would not necessarily just want to pay that person.
I agree. If the $2 million, in excess of $2 million borrower had a lot of headroom, a lot of capital, and had a line of credit that they'd used for this sort of thing before, or other easy access to capital, they may well be concerned that they lied when they said that the loan was necessary, and they may well be concerned. But
I'm gonna bring this sort of back in context, which is, and then we can go to, I think, the under 2 million, which is the bulk majority of this group. Yeah. Most loans that are over $2 million are companies that have access to an accountant or an employment lawyer.
Mm-hmm.
So given the current state of affairs, I think now is as good a time as ever to consult with your individual lawyer or accountant who can look at your individual circumstances and is not just talking in hypotheticals like we are. So someone who can really dig into the specifics for you.
Although we disagree on many things, we wholeheartedly agree on that, and they should do it by close of business tomorrow.
Yeah. Okay, so let's bring it back, because this was a tremendous piece of relief for loans under $2 million, which I think is quite a few of the participants on this webinar. And I just as a side comment, I just sort of think it's miraculous that it's pretty much exactly the same number of participants, about 500 that we normally have, but we sent this out on 4 hours notice. So thank you guys for jumping on short notice. So in terms of the smaller businesses, then, now that this necessary certification has been alleviated, we're back to the question of forgiveness, aren't we?
Well, Darren, we still have the question. And the question is that person that took the loan and is planning not to use it until September. That the certification is the certification that the money was needed to retain people and pay them before June 30th. That certification, there's no answer to that concern. There's nothing in this Q&A 46 that addresses the situation where the money may have been necessary, but it was necessary for us landing on our feet in September, October, and November. And we still have the concern that somebody that takes the money, puts it in the bank, and doesn't use it till then is exposed.
Yeah, and so on that piece, and then I'll sort of go to the technical forgiveness issues. But yes, on that piece, the specific certification expressly says, and this is a different certification from the necessary to support ongoing operations. It's actually the certification on the application form right under it. And it says, quote, "The funds will be used to retain workers and maintain payroll or make mortgage, interest payments, lease payments, and utility payments as specified under the Paycheck Protection Program rule. I understand that if funds are knowingly used for unauthorized purposes, the federal government may hold me legally liable, such as for charges of fraud." So there has not been, the flurry of Q&As from SBA and Treasury on this certification, but it is there and it has not been modified. And certainly the thrust of this certification is what shows up in quite a few of the interim rules, which is the purpose is being to retain workers and maintain payroll. Okay, on that note, then if we come back to the question of, hey, I have my loan, are there more specific guidance that has been issued on the question of forgiveness? And then Stacy, if you can bring your video up. That short answer is no. The answer that we continue to give is we think it's coming soon. We hope it's coming soon. But we're in the same spot. So Stacy, you want to start taking some of these Q&As that hit some of this stuff, and some of these Q&As are on Idle as well, and you're probably the best person to give anecdotal discussion about the status of Idles.
So the first question I see at the top of the box is, are employers required to retain employees until June 30th, even if this is longer than their 8 weeks from receiving PPP funds? So the forgiveness period is the 8 weeks. So to be eligible for forgiveness, you need to retain you need to maintain the FTE count for the 8 week period. If I don't believe you need to, if there is a gap between the end of your 8-week period and June 30th, it's outside of your forgiveness measurement. So I don't believe you need to retain them until June
Yeah,
30th.
the reference to June 30th, where it's coming from, is in two places. One is allowable uses, what you're allowed to use the funds for, whether or not they're forgiven. That's in section 1102 of the statute. And then the second place, and I think where some of this confusion arises from, is these what are referred to as the exceptions or safe harbors to rules 4 and 5 in our forgiveness memo, which is the headcount rule and the employee reduction in payroll. And we've discussed this a few times. And that rule on its face seems to say that if you restore headcount levels and pay levels by June 30th, then rules 4 and 5 don't apply. And setting aside, we've talked about that a number of times and why I'm very sort of nervous about that. But it's very clear that that does not say that after your 8 weeks is over, that you still have to maintain the same FTE headcount. Your headcount requirement ends at the end of that 8 weeks. So for example, if your 8 weeks ends on June 15th, that's when your requirement to maintain the average monthly full-time equivalent headcount also ends. It does not extend for the next 15 days. Go ahead, Stacy.
Next one, utility bill commonly over months, for example, April 22nd through May 21st, and not clearly counted by months. Okay, so I think this is still the, I won't read the whole question, but this still goes to the cost incurred and payments made language, which has not yet been clarified. I think what we would recommend for the time being, until such time that there is further clarification on this, is just to maybe take the most conservative route of that language and make sure that it's strictly for costs incurred during the 8-week period, and that the payment is also made during that 8-week period. It's kind of, so the next question I see is depositing your SUTA during the 8-week period. So I think that kind of, that answer applies to that as well. It's the cost incurred and payment made. So the next question, originally the PPP funds needed to be utilized by June 30th for forgiveness. Our disbursement date was May 12th, so the 8-week period should end on July 7th. So that is also a question that that's not right now. We believe that the way that the statute is written right now, that you would need to use the funds by June 30th, because as Darren just mentioned, the allowable uses of the PPP funds are through June 30th. I am aware that there has been some legislation or some discussion about extending that that period, but so to date that hasn't been passed yet.
Yeah, I mean, we're hoping for a rule that says, you know, if you get your loan in, say, June, that you can use it for a full 8 weeks for forgiveness, notwithstanding the kind of problem in the way the statute is written. Hopefully that rule will come out. I mean, one contradiction, I guess, in the statute, which makes this somewhat ambiguous, is that loans under the statute can be made up until June 30th. So it's permissible to make a loan, PPP loan, on June 28th, for example. But if that's the case, you know, and the way the statute appears to be written, you would have 2 days to use the loan for forgiveness, and that just kind of doesn't, you know, it's not practical. So hopefully a rule will be issued that allows that 8-week period to extend past June 30th, but we have not seen that yet. Stacy.
So the next question goes to spending the 75% of the loan on payroll costs, and I think the way that the question is worded, I think you are correct. The 75% of the funds are need to be spent on payroll costs, not necessarily the loan amount. but at least 75% of the funds. So if you aren't able to spend 75% of the loan amount, at least 75% of the funds that you do spend need to be spent on payroll costs, meaning that the 25% of non-payroll costs would be reduced ratably as well.
Yeah, we agree on this point with the advisor or whatever, but I should just point out that where this comes from is in the third interim, I think it's the third interim rule, and it basically says 75% of funds need to be used for payroll costs. So if you took the sentence literally, it would require you to use a full 75% of your loan amount. Like we think that's not what it is intended to mean, and so we don't take that sentence in the interim final rule literally, but just know that it is there, and it is written that way.
Next one, I think this is similar to the first question we answered, but I'll just read it again. If you rehire an employee to keep the headcount the same, can we lay them back off after June 30th? Since that will be the end of the 8-week period. So no, so as we mentioned earlier, the 8-week period is the forgiveness period. So you don't need to retain the employee beyond the 8-week period. Next, we calculated year-end bonuses and the monthly payroll costs when applying for the PPP loan. Can we pay out bonuses larger than averaged over the 2-month period? Or should the bonuses be within the 8-week period be limited to the amount averaged over 12 months? There's not a lot of guidance as to what how allowable the bonuses will be. So I think if you do pay a bonus, I don't think it's limited to the ratable portion of what you paid in your look back period. But I think we've said in previous webinars, we would recommend that you be careful with the way that you document the bonuses, that they are indeed tied to some kind of compensation earned during the 8-week period. I don't know if you're Darren or Jeff, you want to add.
Yeah, I will, and then Jeff probably has something to say about it. We hope that this is in upcoming rules. We hope this is addressed. There are a few considerations that are in play, but they're sort of considerations, which is in order to spend a full 75% of PPP funds, you probably have to pay a bonus of some sort, because if you have 100% payroll of 100% employees in your look back period, it probably only amounts to about 74%. So you would need a bonus to get to 75%. On the flip side of that, the purposes of the statute are to maintain payroll, not to increase it. So that would be a sort of countervailing interest. And in light of those countervailing interests, we hope that there are rules about bonuses coming out very soon. Jeff?
Judging from the speed in which we're receiving guidance, however, we need to be prepared for the possibility that there will be no guidance. And we need to be thinking about how we're going to talk about forgiveness to our banker. And because the banker, of course, is going to be the first person that decides on forgiveness. And consider articulating something that happened during the 8 weeks that justified the bonus. They went to Leong's and they got the isopropyl alcohol and they filled up the hand sanitizer containers because there was no hand sanitizer left. By the way, hand sanitizer is that alcohol with a little bit other stuff. They went over and above by engaging in relatively unsafe work, or they came to work and they did functions that weren't part of their job, and so they deserve some bonus for the work they did during that 8-week period, and be able to explain that to the banker, regardless of any guidance that comes out. Nobody's going to say a bonus like that wasn't justified. Okay, that sort of bonus is well, they may, but I mean, In my opinion, that's the most defensible part, sort of bonus. So why wait until they draw the line to come right up to the edge of it? Articulate and pay your bonus based on a legitimate business reason that's related to something good that the employees did in an 8-week period.
Yeah,
Yeah,
And
that's
then
a good.
and then also explain to them that this covers, since we paid this now, you're not going to get your end of the year bonus.
I mean, I think it's a good point, and there's two considerations I would say that you should keep in mind. One is that the banks have the same information available to them on guidance about forgiveness that we do, that you do. So we are looking at the exact same stuff. The Treasury website, we refresh it hourly, at least Stacy and I do, and Jeff. They, so to the extent that the guidance doesn't answer a question, the bank doesn't have some special answer. The second is, and Jeff had made this point before, if you're under $2 million, you're talking about the person who's going to review your forgiveness request is the person who gave you the loan, or is the bank that gave you the loan. So, it's another consideration that it's the bank that's reviewing forgiveness, not it under $2 million. It's not going to be the SBA in the first instance. So I think those are, considerations to keep in mind.
I was just going to add that, just in other words, don't just pay a bonus and for the sake of using the funds. You should try to justify that the bonus was earned.
Stacy, you want to take the next one, which is just, I think it's max forgiveness amount for a sole proprietor, which you and I got a little tangled on the last time.
Yeah, I think there's actually two questions, two parts of that question. So still confused about forgivable amounts for a sole proprietor that uses the loan to pay himself. Is this portion forgivable? And the answer to that question is yes. I think what your letter from CPB is probably telling you that if you have a PPP loan that you got to pay your employees, the PPP loan proceeds aren't, you can't pay independent contractors or sole proprietors with those funds because those self-employed individuals and independent contractors are able to get PPP loans on their own. But the amount that you do qualify as a self-employed individual to pay yourself, that is a forgivable amount.
I guess the way I would say it, and feel free to disagree with me, is the way I read the third interim final rule is that for a sole proprietor, just one person that is operating off of net profit, the maximum forgivable amount is going to be $15,000 and change. Yeah, 383. Regardless of what your rent costs are, regardless what any other cost, the maximum cap you're going to hit is $15,000. So if you got a loan for $20,833, which is the loan amount that would equate to $100,000, dollar net profit, you're not going to have full forgiveness of that entire thing. The maximum forgiveness is going to be $15,000 and change.
Darren, can I add something on that point, please? Some of you may be settling cases with people that are concerned about being laid off or discriminated against. And all the money you have available at this point in time is the PPP proceeds. Don't use any more than the $15,382 of that money to settle that case. And explain to the employer, consider explaining if it's true that that's all the money you have to settle the case right now. And if they want to enter a separation agreement right now, that's the maximum. And if they don't want it, you don't have any other money, and they can go to the agency and wait 2 or 3 years and see if you come back. So that's a discussion that you may want to have with those people that think that they're being treated unfairly and are entitled to more than the $15,000. You can't use more than that $15,000, or they would in effect be paid more than $100,000 a year.
Yeah, and just so for clarification, what Jeff is referring to is that severance payments made to employees when, you know, separation payments, that sort of thing, are considered payroll costs under the statute. So we haven't focused that much on it. Jeff, I don't want to take this next question, so you can, which is if we don't spend the money by June 30th, I added that date to it. Do we have 2 years to pay it back, or is it now due immediately?
You have 2 years to pay it back, but it's not clear that you'll be able to use it for anything during those 2 years, either allowable or unallowable. And there's a question about that.
Yeah. And
it may, you may, but we don't know yet.
Yeah. Sean says, I understand it doesn't state TDI. Stacy, you want to take this one? I understand it doesn't state that TDI and work comp costs can be used and forgiven. There's no stipulation that we can't. Is that correct? I don't think I agree with that premise, but go ahead, Stacy.
I know it doesn't explicitly exclude TDI and work comp, but it does limit the eligible cost to health insurance. And I think Jeff actually has a better explanation of what those coverages cover. If you want to.
Well, I guess before Jeff does, I would just say there are no they're not explicitly excluded, but what you should be concerned about is what's explicitly included, and that is they're not in a category of what's included unless you can kind of fit it into one of the boxes, and we don't think it fits into those boxes. Go ahead, Jeff.
Yeah, stated another way, the statute doesn't include a nice new sailboat either, but I wouldn't go out and buy a nice new sailboat. Okay, the statute allows health contributions for health benefits and retirement, and neither workers' comp nor TDI are totally for health benefits. Of course, workers' comp has a component that is medical benefits, and TDI has a component that is non-injury benefits, but they both cover broader purposes that aren't covered by the statute. So I believe all three of us agree, Stacy, Yearend, and I agree, that you should not use your PPP funds and consider TDI or work comp premiums or payments an allowable use.
Yeah. Jen Murata has a question about, at the very end of your 8 weeks, and this goes to the costs incurred and payments made issue. You know, if your end of your 8 weeks is awkward for your payroll cycle, what should you do? Should you cut a sort of midstream payroll check? I guess the way I would answer this is we hope the guidance comes out before your end date on June 15th. We think it should, and we think it's perhaps likely. Absent guidance, a safer thing to do would be to cut that check, because a very strict reading of costs incurred and payments made would be that the cost is incurred within the 8 weeks, which is the work was done within that 8 weeks, and payment was made within the 8 weeks. And so you would need to cut that check within the 8 weeks.
Can I address that premise, please?
Sure.
Another way to handle it is have all your money in a separate account and don't make any payments directly, and transfer those allowable parts into your main business account. And so for that final paycheck, say it's $4,000 and only $2,000 of it is within the period of time. You could transfer the allowable part in and pay that out of your general account, and then you'd have a good accounting without necessarily cutting a separate check.
Okay, Stacy, you want to pick it up?
Do we need to reduce our payroll costs by the amount of medical premium deducted from our employees? And I believe the eligible payroll cost is just the employer's portion of the medical premiums, not so if your employees are co-paying a portion of the medical premiums, you need to take that into consideration. The question that just popped up above that, is there absolute guidance on what the definition of a FTE is? And the answer to that that we keep on saying is no. We're waiting for that definition to come out. I think though at this point, for planning purposes, because I know many of you are probably well into your third, maybe fourth or fifth weeks, so it's kind of late to do planning, but maybe just take the, I think it looks like, the SBA has defined a FTE in other cases, as well as the ACA as a 30-hour work week. So for planning purposes, maybe you can take that approach for the time being.
I mean, I think we said on earlier webinars, if you take an hours and headcount approach, then you probably are good. But it is true that there is another law out there, the Affordable Care Act, that uses an hours standard at 30 hours. But the Affordable Care Act was referenced in one of the prior guidances, is that a word, that came out from SBA, but in a totally different context. So they clearly were referencing the law. They had an opportunity to say FTE is what this other law says it is, and they didn't. So the answer is we still don't know what full-time equivalent is, and we do understand how problematic it is, which is why we're kind of stretching the limits of trying to provide some practical guidance, but it's undefined still.
You want to take the next one?
Sure. We have a PPP loan below 2 million. My boss has furloughed employees and intends to lay off employees. Does it make sense for the business? Would it make sense to return the money by May 14th, a portion that's not likely to be forgiven? Returning the money that you're not planning to use should cut off the 1% interest that you would otherwise pay on it. So I think that would be the consideration of giving back the portion that you're not going to use, giving it back early or not.
But the deadline of May 14th also is specific to the certification, whether the loan was necessary. So
yes. And if you're under 2 million, which that example was, they've said you met the certification. So May 14th is not really a meaningful deadline for you anymore.
Except that if you certified that the money was necessary to retain employees and you didn't retain a portion of employees, the unused money covered, then there still is reason to give the money that you won't use to retain employees back by tomorrow.
Next question, looks like it's another costs incurred and payments made question. Does incurred and paid in 8-week period for utilities mean the bills incurred a deadline within the 8-week period? Yeah, I mean, so this is the question that is probably the top 2 forgiveness questions, which is for things that are incurred outside of the 8-week period, but perhaps paid within it, which includes, paying for utilities that were used a month ago, or paying for wages that were for work that was done before the 8-week period started, or whether it's retirement or vacation that was accrued before the 8-week period but paid within it. That all falls under the same unanswered question, which is we need a definition for costs incurred and payments made. I think the definitions that have come out for things like calculating loan amounts have been fairly practical. So it would, we would hope that we would get a practical definition that is looser on saying the item has to be both absolutely incurred and paid within the 8 weeks, but we don't have that guidance yet. Stacy.
Sure. So I'm still working on hiring back employees employees have declined coming back. Your 8-week window has already started. Do we have to maintain the FTE during all 8 weeks, or have the number by the end of the 8 weeks? So there was that carve out that stated exactly for your situation where you have employees that are declining to come back. There's a carve out that you have until June 30th to bring those employees back or replace them. But as we've said previously, I think if you do take, the longer you take to bring the employees back, the harder it's going to be for you to meet the other requirement, the 75-25 rule.
I would amend that slightly. So to the extent that an employee refuses to come back, that will not count against the headcount rule. So that was fairly recent guidance from SBA and Treasury. So an employee that refuses to come back is not going to count against your headcount. In terms of the headcount rule itself, it's an average monthly full-time equivalent over the 8-week period. So you're essentially talking about 2 months. Probably what they'll say is the first 4 weeks is going to be your average FTE headcount, and then the second 4 weeks is going to be another average monthly headcount, and you're going to take the average of those two numbers, and that is what your FTE headcount will be, and that needs to be compared against the look back period, which is, as we said before, either the first 2 months of this year or that mid-February to mid-June period of last year. And you need to see whether your headcount, average monthly FTE headcount over the 8 weeks is at or above what the look back period is.
If your employee refuses an offer to come back to work, you should let the unemployment insurance division know.
And which I think is actually required, and Jeff probably is the best person for this. Isn't it required? Because don't you get, as an employer, don't you get a weekly kind of questionnaire from unemployment office saying, did you offer this person hours and did they refuse?
Not these days, but in the past you have. And
okay.
Okay. Right. And so right now, if you offer an employee a job, their job or a job, and they decline to come back for whatever reason, simply send a note to the unemployment insurance division that you offered that employee a job and they declined to come back. And to the extent that you don't, you to a certain extent, you're assisting in the fraudulent obtaining of unemployment benefits.
I understand that they're working on opening up a portal for employers to be able to support that as well.
Stacy, do you want to say something about Idle?
Sure. So I've heard that a lot of you at the beginning, probably this week and maybe late last week, have gotten notifications from the SBA that you've been approved for an Idle loan of $150,000. So I think there was rumor last week that we talked about that we had heard that they were going to start to limit the Idle loans to $150,000 as opposed to the $2 million that was previously communicated. We also are aware that there was a pretty toughly worded letter from the Senate, Chuck Schumer to the SBA about kind of reversing that guidance. So you might want to just take that into consideration. I'm not sure if that's going to be what's going to happen with where that's going to go. But basically the letter from Chuck Schumer said that they didn't. That was not the intent of the Idle loans program when it was initially rolled out.
And I can probably make a comment here on that as well. Typically, I think that what we're seeing is that they've just gotten such a high volume of applications that they're struggling through. Hopefully more funding will become available. I wouldn't say that it's capped right now. You can ask for reconsideration at a future time. Right now, they're not accepting those either, but they do want to make more funds available so that they can loan more than just 150,000. There may be progressive disbursements coming forward, but we just don't have information on that now. So I wouldn't say an affirmative yes. I wouldn't say that this is an official cap, but they want to get money out to more of the small businesses who have applied. So keep watching and keep paying attention, and we'll see if we can make sure that we let you know should reconsiderations or requests open up to increase the loan amount, because that typically does happen.
Stacy, do you want to take the next two? I think they're up your alley.
So the next one, can you pay $100,000 max employees medical on top of the $100,000 salary? And the answer to that is yes. The benefits, health benefits, retirement benefits are in addition to the salary.
For employees, not owners, yeah.
Yes,
So.
yes. Next one, if you have a PPP already, can you also apply for Idle? And yes, you can apply for both. As you might have seen right now, the portal is not open up to anyone other than agricultural businesses, but you can apply for both as long as they're not used for the same purposes. So next question, for our hourly employee, can they work 40 hours and still get their vacation days paid on top of that? I'm not sure. I'm not sure about that. I think you are able to use vacation hours, but I don't know if you would be able to double up on your base salary as well.
Yeah, I mean, typically you wouldn't work on a day where an employee claims vacation. So I would say avoid that scenario, but vacation used in the ordinary course would count as a payroll cost.
So let me read the next one. If total PPP amount forgivable separate from $10,000, I think that's $10,000 from, I guess, Idle, and then still 75-25 ratio, do we factor in the 10,000 Idle before calculating the 75-25 ratio? So I think what the question to that is the Idle advance of $10,000. So the Idle advance should have been reduced from your PPP loan amount. So when you're calculating the 75-25 ratio, it should be just on your total PPP loan amount. If you receive the Idle advance after you receive the PPP loan proceeds, your maximum that you're eligible for forgiveness is the PPP loan amount. It's not going to be the PPP loan plus the Idle advance.
Let's take one more. I don't actually have the answer to this one, which is, does anyone know about the rollout of the city's new small business grant program for 30 employees or less? I do not. Jeff, Stacy, I don't think I even heard of it.
Just what I read in the paper this morning, and it said further details would be forthcoming. Brian Luke says it's on the city's website. I just got a comment from Brian Luke. Thank you, Brian. He says it's on the city's website.
Okay, awesome. I think I think we can wrap it up. The website is OneOahu, O-N-E, Oahu.com. So feel free to check it out. Oh, sorry. This is the benefit of crowdsourcing. So revenue has to be under 1 million for the city's loan program. and the website is www.oneoahu.org. I'm sorry, so not com, .org. Thank you, Jeff, Jane, Stacy, Evan, Buddy, Koko. We're getting more information on this. It's someone is saying it's their understanding that it's not a loan, it is a grant. And to all of the thank yous, thank you right back. So we hope there is forgiveness guidance shortly. We will pray to the forgiveness gods for that. And if it does get issued, we will hold Friday's webinar. If not, and if it's all quiet on the home front, we will probably skip and come back next week, although we will miss you all dearly. And I'll try to get a new house for a background for next time. Until then, thank you guys. Have a great week, and we will see you again soon. Thanks.